my Mompreneur studio. I'm Anissa Crespo, and today's episode of She Swaps, I am talking to Melissa Wood. She is the CEO, CFO, and advisor of Capital Accounting and Finance. Melissa, welcome.
Hi, thank you for having me. Excited to be here.
Absolutely. Yes, we're excited to have you. So tell us a little bit about who you are, how you came to become all these wonderful roles in capital finance, and anything else you'd like to share.
Sure. So first and foremost, I'm originally from San Diego, California. That's where I went to school. It's where I got my MBA, have a bachelor's degree in accounting. Um, I started my career as an accountant for concert tours. I did that for about 5 years, and then due to a lot of economic concert tour industry hit some bumpy roads and um, kind of fell apart, for lack of a better word. And I had the opportunity to work for an early stage tech startup company and realized that's really where I shined. I understand engineering a little bit better than the average accountant. And so getting into the tech world and all about that was great. And then learning, how companies like this get financing and how to talk to investors and really how books need to be kept to attract investors, because you really do have to have your finances really rolled up tight for both lending and venture capital.
Sure.
So learned that very quickly, worked for that company for about 6 years, and then moved on to several other small tech companies that were in their early stages before landing a role as an advisor at a DC advisory company. Worked for 2 advisory companies before deciding I thought I could do it better than the roles that I was in, and started my own company, and here I am.
Good for you. I love that. So about how long have you been operating your own company?
So Capital Accounting and Finance has been in business since November of 2022. And it's been a fun road. We have right now we're working with about 6 early stage tech startups working on getting their books in, everything from getting their books in order to getting them financing, also doing their bookkeeping and doing some strategy advisory.
Well, that's awesome. First of all, congratulations on getting started and taking the initiative to be like, you know what? I am better than this. I can actually do this on my own and really offer some clients something pretty lucrative. So I love that. And I'm just curious. So you said you're from San Diego. So where are you at now?
Raleigh, North Carolina, right in the Research Triangle.
Perfect. All right. So that works out. Now, who are your ideal clients? Is it just is it a tech startup company that has an idea and they need funding for it? Or tell me a little bit more about that.
So I do have some clients that are looking for funding right now. Usually those clients, what they really need is what's called a pro forma. And that's usually like project-based work, whereas my recurring clients usually already have funding. So my business does 2 things. One, we do just project-based work for a fee. Those are usually one-time clients. And then if they get funding, they come back. And then I work with companies that are either pre-seed or seed, sometimes Series A or Series B, that already have funding. And really then we're looking on how to execute the strategy that their investors are looking for them to get. As a CFO advisor, obviously it's not my business. I'm not in charge. I give you my advice, and whether you take it or not is really up to you. So
Gotcha. Okay, that's really interesting. So I think you're probably the first person that I've met that does that. So that's really awesome. Um, are you working on any projects? I know you have an ebook out. Why don't you tell us about the ebook?
sure. So I wrote an ebook. It just kind of came about because as I've probably worked with close to 50 early stage tech startups at this point, and there seems to be kind of like a revolving door of early errors that they make that prevent them from becoming successful. Not necessarily, they are hurdles that if you identify them early enough, you can put a stop to it, change direction, do a pivot, and overcome the issue. But I really wanted to just get it out there that these are the 7 ways that I personally think that if you're really trying to make your early stage startup successful, that you should really watch out for. So it's 7 things that I really think that companies should do in their early stages. The first thing is underestimating their burn rate. So a burn rate is just how fast you're going through the money that your investors have given you. And they always think the money is going to last forever, and that really doesn't happen. When I have clients that have investors, I try to do a forecast that forecasts out a year, and if your money runs out in a year or less, it's time to start looking for that next round of fundraising, because you can't predict the future. You can't predict if your product is going to be done in a year. You think it is, but stuff comes up all the time. So you want to make sure that you have your bases covered. The second item is choosing investors that aren't compatible with your business. Like if most startup, whether you're a tech startup or any other business, I'm sure you know as a founder yourself that it's a little bit of a passion project as well. And so you want to make sure that the investors that you're taking money from have the same goal and vision for your business as you do, because once you take their money, they're kind of your boss, in a sense. And the right investors will give you advice and strategy and help push you forward to where you want to go. The wrong investor will say, no, I know your business better than you, and this is what you should be doing. And so that is a big one that I see happen a lot. I've seen companies fail because the founder and CEO is just absolutely at odds with the investors. They need to raise more capital and they can't, because they can't get a good reference from their investors. So that's a big pitfall I love for people to watch out for.
Wow.
So that's just, don't take money from anybody.
Yeah, no, that's such a great point. I mean, not everybody has the same end goal in mind or can see your vision. So if somebody is funding a project for you, you really want to make sure that it's clear from the beginning, obviously, before you get into any kind of joint venture.
Yeah. And so that being said, this kind of is in tandem with watching your burn rate, but not looking for financing as soon as you need to. Again, kind of goes back to they think they have enough money to last forever. And realistically, if you don't forecast that out, you don't. And so that's number 3, is just making sure you're looking for the financing when you need it, well before you need it. Most people don't realize that it usually takes 6 to 8 months to find an investor. So you really need to start looking 6 to 8 months before you need the money. So that's,
Absolutely. If you fail to plan, you plan to fail. So that's so true.
yeah, and that's a recurring theme in my book, I think. Is definitely planning. Can't drill that into people's heads enough.
Right.
So the next thing is not following US GAAP. So US GAAP is just a set of rules that banks that are lending amounts usually amounts over $10 million, and also venture capital investors, angel investors, require you to follow. And it is very different from how the typical business owner keeps their books. For example, a lot of business owners keep their books on a cash basis, which just means they're watching the cash in and the cash out, and they're not really lining up expenses and income to match each other. Whereas US GAAP requires you keep your books on an accrual basis, which means even if the cash comes in, it's a liability to the customer until the project is complete, because you either owe them the work or you owe them the money back. And matching income to expenses And it can be very tricky. It's not always, depending on your business structure. SaaS companies in particular have to follow ASC 606, which is pretty complicated. Also, real estate has ASC 842, which is pretty complicated, but I don't deal too much with that with tech startups, unless they're some sort of real estate technology. So just failing to make that conversion, or like, I really recommend that people start with GAAP, because changing over and doing the calculations to switch it is painful. But the earlier you do it, if you start it on a cash basis, do it as early as possible. Like, do it today if you can. If you think you're going to be looking for investors or loans, if you're not looking for investors or loans, it doesn't really matter. You can keep your finances however you want. So also, not tracking R&D expense is another big one, because the US does have a pretty big R&D tax credit. So basically, if you're doing your R&D here in the US, the government gives you a tax credit to reinvest back into your company. A lot of companies these days are outsourcing R&D to other countries like India and the Philippines, where it can be done cheaper. Software coders are a lot less expensive over there. But if you do it in the US, it's really important to track those costs, even if it's just investing in software or stuff that anything that happens here in the US, you are eligible for a tax credit for. So that is number 5. Number 6 is improper budgeting and forecasting. So again, same. A budget and a forecast are really two different things. A forecast is where you think you are. A budget is something that you routinely check to make sure you're staying on track. So, you can forecast out 5 years, but a budget is like, I think next month, this is what I'm going to spend. Am I sticking to it? And so you really definitely do want to stick to those budgets, make sure they're good, make sure they're accurate, and make sure they're in line with the money that you have, so you're not overspending. This is actually my least favorite point from my book, but it's definitely one that everybody must follow, but it is failing to report sales and use taxes. Sales and use tax is one of the most complicated things about running the finances of your business. Just since 2017, I guess first and foremost, let me take a step back. Every state has different sales and use tax rules. Every city has its own sales and use tax rules. So they change all the time. Since 2017, there has been over 1,000 changes to US sales and use tax laws. So failing to keep track of those changes and reporting them incorrectly is a big problem that I see with early stage companies, because they don't necessarily have the resources to do that properly. It's so much to keep up with. And because every state and every city is really, really different, or I shouldn't say every city, every county is different. It has its own unique nuances. It's a lot of research, and you're spending tons of time researching, what should I charge this person? Is what I'm selling taxable in this state? Is it not taxable in this state? Because a lot of times software that's not a physical product is not taxable in some states. But if they send a disc or a CD, which nobody does anymore, it is taxable. It becomes a taxable event. And so not reporting that accurately from the beginning can cause a lot of problems, because one, the state could shut you down and say you're no longer allowed to do business in this state, which obviously you want to avoid because you're losing out on a bunch of customers. But also it can lead to sales and use tax audits, which are very time consuming, where they go through literally every invoice you've sent out, every invoice you've received from every vendor, to make sure things were properly recorded, and they can take months. I worked for one company where it took almost 2 years to get through all their records.
Wow.
And because every state has a different look back period. Some states only look back 3 years, some look back 10. So depending on how far the state wants to look back at your records, it can be really painful. And also when you're trying to raise fundraising rounds and they see that potential liability on your books, it can be a big thwart to getting investors, because they're like, well, we see that you're going through this audit, and do you know what to expect? And how much is it going to be? Because I think one of the biggest issues with not doing the sales and use tax properly is that if you don't collect at the time that you issue the invoice to your customer and you get audited 2-3 years later, you can't go back to that customer and say, hey, we forgot to charge you sales and use tax, and you actually owe us $3,000 or $4,000 more. They're going to not pay you.
Right.
And so that's the last and final thing, but it's a big one. And it's not fun to calculate. It's definitely my least favorite part of my job, but it is my job, so got to do it.
That's right. So do you ever work alongside of your clients, bookkeepers or accountants?
Yeah, so I actually have a team of bookkeepers and accountants, so my company does provide that if you need it. Our bookkeeping services are fairly inexpensive. We outsource it, so comes out of India. They're certified accountants. They're great. People that I've worked with at previous jobs for years. That's typically very inexpensive, but I also have clients that have their own bookkeepers and their own accountants.
Okay, great. So, where would you find your ideal client?
So far, I've been pretty lucky that most of my clients have been referrals. One client knows another potential client and they refer them. So that has been very lucky. Raleigh has a big tech startup week every April. I've gotten clients from there. I went to a tech startup week in Las Vegas, I have clients from there. So most of my clients have come either from in-person networking or referrals. I did just started in January doing online marketing, but I'm still figuring that out. I have gotten one client from there, but that is very, very new. I literally just launched my first Facebook ad campaign last week. So we'll see how that turns out. But really, any early stage tech startup that is either looking for funding or already has its first round of funding is the ideal client for me.
Okay, perfect. Yeah, I hear you. Online marketing, Facebook ads, Google ads, that is another animal for sure. It does take some learning and some coaching, if you need help with that. And there are definitely people out there who can guide you through it. I know for me, I have used it in the past and it's frustrating. So I definitely hear you on that.
I'm lucky. I have a really great coach. I'm a big fan of whatever you're not good at, hire somebody to teach you how to do it or guide you through it, instead of trying to waste your time learning on your own. Not that learning on your own is a waste of time, but my life is so fast paced these days that I don't have time. So
Yes,
it's
100%.
better to outsource whatever I can.
Definitely want to do that. It's one of the reasons why I like to help women and, through my coaching program is so that they can fast track their success because, there are a lot of mistakes to be made along the way. And show me a startup business that hasn't faced challenges and mistakes, and I'll show you a liar. So,
yeah, exactly.
All right, Melissa, well, is there anything else that you would like to leave us with today?
No, I think that's it. But if anybody has any questions, I always welcome people to just reach out. If it's something I can answer in 10 minutes, I'll probably do it for free. But I love meeting new people. I love networking. So definitely my phone line is always open.
Awesome. So I'll make sure everybody has the links where they can reach you. And I just want to say thank you so much for joining me today and sharing all of that. Very fascinating and intriguing. I love the fact that you're helping people, especially in something that is so stressful as starting a business. I'm no stranger to it. We need you. So thank you.
Thank you.